Hello, everyone. Welcome to the market update for Tuesday, September the 14th. Just a reminder, I'm going to be traveling tonight and into tomorrow, and then I'm going to be out of town for the rest of the week. So the stock specific class on Thursday, I'm actually going to do it tomorrow, but it won't be a live class because I don't know when I'm going to be able to do it. So I'm going to just, when I can fit it in my schedule, I'm going to get it done, and then we'll post it on YouTube there, so you can view the recording of that. Just type in TradersPro on YouTube, and you can view the recordings of any of the classes. You can review the recordings of those. So. But just wanted to make you aware of that in case you show up on Thursday and I'm not here. That class will be, I'll be doing that tomorrow, and again, I don't know when. It'll probably be later in the afternoon that it gets posted, but you can look for it at that time. And that's when I'll go over more of the individual stocks. I'm going to go over a couple today, but the market conditions aren't great for new trades, and so we want to be a little bit careful about that. So we've had some pretty erratic markets the last, pretty much the last week or two. I still don't anticipate a big correction. I know you're hearing a lot of people calling for one and saying that we're going to get one here. I still think that this is just going to be a minor pullback, and we're going to surge higher before we get a bigger correction. Part of that reason is something I talk about all the time. There's too many people that are expecting a bigger correction right here, and usually we don't get big corrections when people are expecting it. Usually we get them when people aren't expecting it, and what creates that environment is if just what we're seeing right now. If we were to surge from here, people would assume that this market is bulletproof, that there's no way it's going to pull back, that each time we thought we were going to get a bigger correction, we didn't get one, and it'll set up the conditions for that bigger correction. Now, I'm not trying to be a market psychic. I'm just sharing my experience over the many years I've been doing this. I've been through so many of these cycles that there's characteristics that precede these bigger moves. Now, I've also pointed out, though, that there can be the unexpected. There can be bad news that comes out of nowhere that's really bad news that freaks the market out and could cause a bigger correction right here. It's definitely possible, but we can't trade on expecting the unexpected. Bad news that we don't know is out there yet. We can't anticipate that or try to factor that into our trading decisions. You'll drive yourself crazy trying to do that, and probably be wrong a lot if you're trying to do that. So, but let's take a look at the direction alerts here. You can see that we pulled back quite a bit. Well, first of all, let's look at this chart right here. Whenever you have sentiment, so sentiment is still pretty high right here. So that means that, again, the market is not scared. It's not, and we're definitely not seeing that in any of the selling. It's been kind of a steady bit of selling, but that's another reason why I don't think that this isn't anything more than just a minor pullback, because usually you'd start to see some panic selling in this area right here, and we just haven't seen that yet. But sentiment is still elevated. But look at momentum. Momentum really dropped right here, but still momentum is higher than breadth. And when you have that order right there, sentiment, momentum, and breadth, it's a sign of a tired market, and that's really what I'm seeing right now. We're in a period right now where the market just seems tired. It's kind of directionless. We're out of earnings season. We don't start the new earnings period until October, and so it's just kind of, it's all focused on the Apple conference today and what the new iPhone 13 is gonna look like. So anyway, that's indicating that we're in that kind of that tired market. You can see here momentum is pulled back into the hold area. breadth is in the trending area. Sentiment is still high. See, it's still in that complacency area, the high range right there. And so what I would anticipate is if we start to rally, we'd start to see sentiment really get extreme. Now, remember, on the last time when momentum moved into the extreme range, it was breadth that was lagging. But I think if we start rallying and we see the breadth pick up as well, and all these three indicators get into that extreme level, then we have to start being concerned about a bigger correction, and we'll take more defensive measures in our portfolio management. Now, one of the things I'm going to talk about tomorrow as part of a training, is part of the stock specific class, that recording I'm going to be doing, is I'm going to be talking about inverse ETFs. So you could inverse index ETFs. So we can add, if we need to get defensive, and we're definitely not there yet, we can start buying these inverse ETFs to where they go up when the market goes down. When the S&P goes up or goes down, these will go up. And so it allows you to still be kind of long the market, but be able to profit from the market dropping. But you don't want to use these unless you're expecting an imminent pullback, because there is some risk associated with it. I'll talk about those tomorrow, though, when I go over that training. I'm going to do a training today, though, on sector ETFs, because a lot of you hear these sectors brought up on CNBC or other financial sites, and you may not know how you can incorporate those into your trading. And so we'll take a look at some of those, and we may add some of those to the portfolio as well. But I'll talk about that as part of the training today. Now, if we go into the buy-sell ratios here, you can see the sells are exceeding the buys, but not in an extreme level. But down here, again, this is the buy-sell of the entire market. We're down below 1. Again, we're at 0.69. What that means is we don't want to be adding a lot of new trades in that environment. We'd want to see that start picking up again. Now, there is one trade I may add to the portfolio. It actually triggered yesterday. Well, it hit the buy signal yesterday, and then I got the email last night. I saw that it hit a buy signal yesterday, but I wanted to wait to look at it today, and I still haven't made up my mind if I want to add it yet, because it's kind of down a little bit today. But that would probably be the only one I would add if I do add today. I also did get out of Tesla Friday. I'll explain when I get to that portfolio management. I'll explain why I got out of that one. But I had kind of pointed out in the previous class that I might do that. What I would be looking for there. I was using a tighter stop to get out of that one. But anyway, so the overall buy-sell ratios of the market are down below 1. So it tells us, with all this combined, the direction alerts and the buy-sell ratios are saying that this is not a market to get aggressive in. It's kind of we want to kind of wait and see. Now, again, you might say, well, Jerry, you just said you don't think this is going to move into a bigger correction. Why not get aggressive right here? Why not anticipate that things are going to start going back up and just jump in? Well, again, we can't know the future. You could definitely do that if you wanted to ignore the signals, ignore everything else, and just close your eyes and jump in. But I'm not a big fan of guessing. And like I said, my job as a trader is not to be a psychic or try to predict the future. It's to recognize the clues. And there's still enough clues that could suggest we go lower from here. And so I want to wait for that confirmation. I want to wait until things start moving up. We see these buy-sell ratios here of the market move up above 1. We start to see that that the market looks like it's going to start trending back up again, because there's plenty of money to be made following the trend. And that's what we're doing as trend traders, is not trying to outsmart the market, but just wait until we see what it's actually doing and then jump on and follow it. Sentiment is pulled back quite a bit, so we're not in any sort of overbought condition there, so we're okay from that standpoint. If you look at the index buy-sell ratios, all of them are below 1. So, you know, they have pulled back quite a bit. They're definitely not extended. What would be an extended ratio when you start getting close to double digits? You know, 10 to 1, 12 to 1, something like that would tell you that that's getting overbought. We're definitely not there. We're on the opposite side of that, where we're below 1. All right, let's go through our charts here. And you can see we pulled back. What's really concerned me the last few days is if you can know how to read your candles here. You know, we had the big down day on Friday. We attempted to rally. We gapped up at the open yesterday, but man, we couldn't hold it. We sold off, actually went lower, came off the lows of the day, but still closed lower than where we opened. So we closed down here. Today we did the same thing. We gapped up, we tried to rally, and then we're down near the lows of the day. That's not a good sign, but we have also pulled back far enough to where we're kind of lined up with this trend line right here, or close to it. That's not a very straight line, but it's tough to draw. Just free draw a straight line there, but we're in an area where we should start to see a bullish reversal, but we're not seeing it yet. And so, again, I want to see some evidence that the markets are starting to go back up before I want to start jumping in. And if it breaks that trend line, it could start to get ugly if it breaks that long trend line that's been in for the last several months. So let's talk about that. What would you look for? Well, just because it breaks the trend line doesn't necessarily mean it would collapse, but that'd be the first sign that you're in trouble. And then you also want to pay attention to that previous higher low. This is a higher low back here, higher high, had a higher high up here. This is so far a higher low, but if it were to drop down below there, now you're getting the look of a trend reversal, and you'd have to be concerned about a much bigger correction taking place. So that concerns me a little bit. If we look at the Dow already looks very concerning because it's broken. It broke below this low, so there's its trend line right there, and it's broken the trend line, and it's gone to a lower low right here. That was also the previous resistance that it dropped below as well. So there's a lot of bearish look to the Dow, but you could also make the argument that this is a little bit of a larger ABC correction right here. It is looking a little bit more sideways to this, that it could still rally off of that. And we're not seeing the other indexes break down yet. And so, but that's something to keep an eye on. It's something that concerns me a little bit, and so we'll keep an eye on that. The NASDAQ 100 has been the strongest of the trends, and it's pulled back just slightly, but it has a little bit more of even a sideways look to it. Here's its breakout area back here. Still a little ways away from that. But there again, it's tried to rally each of the last few days. It's opened higher, and it's ended up lower. What I'd like to see out of this is I want to see the opposite happen. To get me turning more bullish, I want to see a gap down. Hopefully it happens soon, maybe tomorrow, where we gap down and then start rallying off of that gap down. And that's what I was hoping for yesterday, because on a Monday, anytime you have a down Friday, what you want to see as far as price action, you want to see a gap down on Monday and then reverse it, start moving back up. That's when I get very aggressive with my buying, is is short term at least. With shorter term trades, is if we get a down Friday and then a gap down on Monday and it holds, it doesn't go lower, it starts rallying up off of that gap down. You could do pretty well in the short term with other patterns that are doing the same thing. But we had the opposite. It gapped up, and then if it doesn't hold that gap up and starts dropping, that's usually pretty bearish. And we've done that 2 days in a row. So that's something I'll look for this week. And again, it may happen later in the week. Maybe we do pull back a little bit further, but I'd like to see a gap down and then reverse it. See kind of what happened right here. So we had this little pullback right here, and then it gapped lower. It opened down here and then closed up here. It had that bullish reversal. Same thing happened right here. Had this pullback, gap down. It actually went a little bit lower. And I don't mind if it goes a little bit lower as long as it closes higher, gives it a little bit of a hammer candlestick formation. That's what I want to see soon. And if we can see that, especially if it holds that breakout area, that'll be a good bullish sign that the market could start to move back up. Russell 2000, again, this tends to be a little bit more of a leading indicator, and obviously it's been lagging if we look at a little bit of a longer term chart. All the other indexes have broken out to all-time highs within the last couple months, but this has been totally lagging, moving sideways. But this could just be a little bit of a pullback as it attempts to break out and move to a new all-time high. I don't see anything in here as a leading indicator that this is collapsing. It's still within this range. Obviously, if it were to move down and break below that range in a major way, that'd be a big warning sign. But I'm not anticipating that right now. But there again, it's kind of right in no man's land. It's right in the middle of that range. And so, again, we don't want to be aggressive. We don't want to try to guess which way it's going. It doesn't look panicky or overly bearish right now, but it also doesn't look overly bullish either. So, this is again, when you recognize these clues, the best thing to do is sit on the sidelines. Don't do a whole lot. I say this all the time, and it's not me that invented this, but sometimes the best trading decision is to not trade, and sometimes we forget that. Just because we have money in the account doesn't mean we have to put it into something. You can sit in cash for a while, and that's very often a smart thing to do, especially in these types of conditions. All right, let's move on here. Bonds are now moving higher. One thing I pointed out in the last market update was I pointed out this trend line right here to see if we break above that. I also said this area was at the critical spot as well. If we break above it or below it, we did both today. We broke above that level, and we broke this trend line. So it's causing me to be more bullish on bonds. Expect the TLT to continue to move higher. This overall move still looks corrective. It still looks like it's a correction of this trend up. It could be that we're breaking out of that right now. We'll see if there's some follow through to that. Now that can sometimes be a signal of concern for the market. If bonds are rallying, it can very often, not always, but there tends to be an inverse relationship where when money comes out of the market, it tends to go into bonds, and when the market is or when traders, professional traders, are very confident about the market, they take money out of bonds and put it into stocks. So that this could be a little bit of a sign that maybe the professional traders are getting a little bit more defensive and moving money into bonds. We'll see if that holds. Again, that relationship doesn't always exist. It doesn't mean it has to do that, go that way, but there's that tendency. That's why very often when you see a big down day in the market, you'll see the TLT will be up and bonds will be up. And that's usually a sign that those professional traders, and usually it's professional traders that are doing this. The average trader isn't going to be moving money into bonds and into the market back and forth. That's usually something big fund managers do. And so, again, part of what I'm trying to teach is these little clues, these subtle little things you can look at that tell you what these big professional traders are doing. And those are the people we want to follow because they're the ones that move the market. They're the ones that are going to cause the market to go up with their buying or down with their selling. Gold, the key area in gold that I've been pointing out is this resistance area up here, and then this low down here. I've talked about this a number of times where I felt like this is the start of maybe a bigger move up. This could be a larger bullish ABC pattern, and that maybe we're starting a new trend up in gold. What does concern me in the near term, though, is that you have this sharp, impulsive move down. It's a real quick move, but a sharp move down, and then we've been moving sideways. Whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's the direction it's most likely to move in after it's done moving sideways. Well, the previous move prior to going sideways here was down, so I'm a little concerned that maybe it has another move down. Now, maybe that's just a smaller ABC correction of this move, and then it goes higher. It is up today, and it doesn't mean it has to go lower with that sideways move. But that's something that we'll keep an eye on. We're still the major areas are going to be this high and this low. We're still holding to that. So if this happens to lead to gold moving higher and it breaks out, then who cares that it was moving sideways right here? The breakout to a higher high right there would be the main confirming factor there. But again, we're kind of in no man's land right now with gold, and you have this nice little bullish day today, but with the overall context, that looks bearish, and so you got mixed signals there. And I wouldn't want to do anything real major when I'm getting mixed signals like that. Oil's been pretty bullish lately. Again, I've been talking about this being a larger correction, ABC correction of that trend. This has been a nice little move higher. We had a little bit of sideways movement in here, broke out of that. But today's a bearish candle today, kind of a bearish engulfing. It's kind of engulfing the day before. Now, again, that could change between now and the market open. If or market close, if this were to rally up a little bit, it wouldn't be an engulfing pattern. But the fact that it opened higher and now it's trading lower is a bearish reversal, even if just by itself. Now, that could just mean a short-term little pullback, and the rest of the market is still looking a little bit bearish, so maybe oil pulls back a little bit as well. But, I mean, overall, though, the trend still looks like it wants to go higher, and I would anticipate that oil is going to continue to move higher in the longer term. The dollar, we saw the dollar break lower back here. We were looking at this key area right here. It dropped below that, came down to this area of support, and now you've got this little sharp move up, and then it's kind of been moving a little bit sideways here. It's trading a little bit lower today, but look at the price action of it. Opened lower, and it's higher than where it opened. But overall, it's still in this little sideways range. That doesn't necessarily mean you're reversing back into an uptrend. It could be that this is wave A, wave B, wave C of a bearish ABC pattern, and you drop lower. Again, we're in kind of a no man's land right here. Because this is an impulsive right here, and you kind of pull back from that, you can look at these. Definitely this down here, because you've got a lot of support. That's definitely would be a bearish signal if it drops below that. If it goes above this high right here, it could be viewed as a little bit more bullish, but there again, you'd have to be a little bit worried that could be just a wave C of a bearish ABC pattern, then it drops. But that can be an area there that you could watch to turn a little bit more bullish. You have a little bit of resistance right through here. So if this was ending up a bearish ABC pattern, that would definitely be as far as I would expect it to go before going lower. If it got above that area there, that'd be a lot more bullish for the dollar. So those are a couple key areas to look for. Above here and above here would be giving us more of a bullish slant towards the dollar movement. But right where we're at right now, we're in no man's land. I wouldn't want to make any sort of short-term call on that. And even longer term, this whole move is sideways right here. we barely broke out up here. We didn't quite go lower here. We had an even low right here. Not a strong trend direction, in other words, to go on with the dollar. And so we want to keep that in mind as far as context. We want to make sure we're aware that there's not a real strong trend in the dollar right now. The VIX has been moving up a little bit with the market going lower. That's something to keep an eye on, but we're not getting big spikes that would indicate fear. There's a little bit of a spike on Friday, but it's kind of come back a little bit. So again, I'm not seeing a lot of fear in the selling, but that's something to keep an eye on. That could happen at some point, but that's something we'll watch for. The Semiconductor Index, this tends to be, we like to look at this with the NASDAQ 100. Had this little pullback right here, and since then it's gone higher. It's higher today. So if this tends to be a little bit of a leading indicator, this is one of the reasons why I'm not overly turning bearish on the market. Well, I think there's still a chance it rallies higher. With the NASDAQ 100 being down over the last few days, we already looked at that chart. This going higher, we'll see if this ends up being a little bit of a leading indicator telling us that the NASDAQ 100 could turn around and start breaking out and moving higher again as well. It's good to see the chips rebounding and rallying like that. We'll see if the NASDAQ 100 follows. The opposite, though, for the Dow transports, they've gone. We wanted to see it hold. We saw a possible turnaround right here where you had the higher low. You kind of had you had lower highs, lower lows through here. And then it looked like we had this higher low, even high. It didn't go to a higher high right there, but then had another higher low right here. We were anticipating that maybe we'd break out of that. And opposite is true. We went back below that low. And then we're coming down to this low down here on a very big down candle. So it's not looking pretty good, not looking very good as far as the transports being a leading indicator. Now, remember, the reason why we look at the transports, now you remember we need to look at this in relation with the Dow Industrials. We're not going to compare it to the NASDAQ 100 or the S&P 500, but what this is telling me is that the transport stocks are really suffering, and they are. You look at the railroad stocks; they've really been hit. UPS, FedEx, the airline stocks have been beaten up a little bit. What this is saying is that this could affect the economy. The transportation stocks are moving products, and if they're not moving enough products, it could affect economic growth. Now, a lot of people think that this is temporary, that there's just these supply chain issues, and there are. If you've been paying attention to anything going on in the world, there's been people have been warning about Christmas shopping. You better do your Christmas shopping now, because there's going to be stores that are out of a lot of stuff, not able to get it because of supply issues, and that's being reflected in the chart here. So it could just be temporary, though. But again, I'm going to wait until I start seeing the chart tell me that that's changing and moving back up again. And until then, if this continues to underperform, that's not going to be very bullish for the market. But that could be another reason why we're seeing the Dow Industrials underperforming the other indexes as well, and looking a little bit worse than the other indexes. So we'll keep an eye on that relationship. Bitcoin has pulled back a little bit. Bitcoin's really not a factor. Sometimes it's been a factor in moving the markets. It's up a little bit today. Overall, it looks like this could just be a little bit of a correction within this little upward move right here. We'll see. I don't see anything in the chart there that would lead me to believe that Bitcoin's going to drop in a big way right here. It just looks like this pullback looks like just a correction within the uptrend. but you are kind of at a key area right here. You'd like to see this area hold. You did come off the lows of the day yesterday right there. There's some resistance here, support here. You're hoping this is support at this point here. We'll keep an eye on that. All right. Now, one thing that you can add, I'm going to kind of do the trading today. This is going to be on the sector ETFs. Now, when I talk about sector ETFs in this context, I'm talking about the major sectors that traders look at. And you hear this talked about all the time if you pay attention on CNBC or any of the financial websites out there. You know, very often at the end of the day, you'll hear someone say, well, materials really did well today, or utilities did really well today. They outperformed the market, or financials, or consumer staples, or consumer discretionary. Well, what if you hear that consumer staples are really outperforming the market, doing well, and why not trade that? If that's a trend, can you trade that trend? Can you trade that whole group? You could go look at individual stocks within that sector, but what if you pick the wrong ones? What if you're not real confident in your ability to pick the individual stocks? Could you just trade the sector trends? And you can. And I want to go over the 11 main sectors that professional traders look at. There's multiple sectors beyond that. In fact, one of the trainings I did a few months ago, was we talked about these muscle ETFs. ETFs are exchange traded funds. They allow you to trade groups, and you can go into these muscle ETFs, and these will tell you individual. There's so many of these. There's all kinds of sectors out there. You know, if I want to trade uranium, there's a uranium sector right there. Oil and gas, Brent oil. If I just want to trade the Brent crude oil there, I can trade it. You could, there's a lot of people that love to trade these ETFs in the same way that we trade the individual stocks. You go to these muscle ETFs, you look at the ones that are really outperforming, you can trade those. But what do I mean by the 11 main sectors? Well, what I've created, and you can create this yourself as part of your watch list, just go in, and you might want to just jot down these ticker symbols right now and then add them into a watch list. But you can add a tab right here under your watch list tab, and then you name it. I name it the sector ETFs. And we can see which ones represent the different main groups here. It doesn't have to be in any particular order. And we'll look at these individual charts here in just a second. But the XLE, that's your energy sector. So if you hear that energy has been doing very well and is outperforming, or you hear maybe your favorite commentator or trader on CNBC says he likes energy for the next several months, I wouldn't just go off of that. Make sure you look at the chart. Some of these people are not very good chart technicians, because they'll say, oh, I'm buying this, and I'll look at the chart. I'm like, why are you buying that? That's a terrible decision. But energy is XLE. Materials are XLB. Now, I don't have time to get into what types of stocks these are, especially since the internet is so great nowadays. If you want to go do a Google search on materials stocks, or the materials sector, it'll pull up individual names that are considered part of that sector, so you get an idea of what that means. What type of stocks does that mean? For instance, consumer staples. These are stocks that people are going to buy no matter what the economy is doing. You got to still buy toilet paper. So your grocery store stocks, they're not going to be based on economic conditions. You still have to go to the store and buy food and buy, shaving cream. So these are those types of stocks. Consumer staples would be those types of stocks. So if you want to get a better idea of what some of these that you don't know, like what is consumer discretionary? Well, these would be stocks that you don't have to live on, but you'd like them. You'd like that TV set, that brand new TV, but it's not. It's not. I don't know. Maybe a TV is considered a staple, but discretionary buys or purchases and things like that would be stocks that are under that sector. But if you want to see individual names, you can go Google search those. And I'm going to save time in today's update because we could spend forever going through all the different stocks that are in there. But you could look at some, and it's not a bad idea to do that. So you have an idea of whenever they say consumer staples are outperforming, well, then you have a few names that pop into your head of what those type of companies are. You can go look at those charts, those individual stocks if you want. And you can do that just through a Google search. All right. So the the materials are going to be the XLB. Industrial stocks, this will be the XLI. Utilities would be the XLU. Healthcare would be the XLV. The financial sector would be the XLF. Consumer staples would be the XLP. Consumer discretionary would be the XLY. Technology would be the XLK. Communications would be the XLC. And then home builders would be the XHB. Now, again, there's others you could add to this, and if you want to add them, you can. Remember, I look at the chip sector quite a bit. That's a little bit more focused sector, but that would be the SMH. You could trade the whole chip sector like that. But there's a lot of these, and you could make this list as big or as small as you'd like. But if you've created a little watch list like this, now I could go in and say, well, which of these sectors is doing pretty well compared to the rest of the market? Now, let's look at energy. Well, what jumps out to me on the energy sector? The XLE. Well, could we be forming an inverse head and shoulders pattern? Now, it's down today, so I wouldn't want to jump in and buy the energy sector yet. But, if it can break out above this range right here, have a nice little up day where it breaks out above there, it could work its way back up to these previous highs, and it could be in a start outperforming, start reversing that trend into an uptrend, and you could just trade the whole group instead of trying to find individual stocks within that group. And so what I might end up doing, like I said, I'm not doing it now because I don't want to buy a whole lot right now, but we might add one of these. If I see a nice pattern here to trade, nice confirmation, we might add some of these to the portfolio where we're trading some of these groups, and so that you can see that you could add those in as well. And then tomorrow I'll talk about inverse ETFs as well that you could use as a defensive measure if the market starts to pull back. So the XLB right here, you have this big drop right here. You were stair-stepping down right through here. Then you had this impulsive move up. So you had impulsive down, impulsive up, went to a higher high after lower highs and lower lows. Now you've got this real sideways move right here. So I'd want it to hold this support area. I wouldn't want it to go any much lower than that. But if it can rally back up and break out above here, that'd be pretty bullish for the for the material sector. XLI, see, that looks like that's looking more bearish to me. So the industrials are looking a lot more bearish. Gone to a clear lower low right there. At least in the near term, it's looking a little bit more bearish. So anyway, you can go through these. This looks like could be just a bullish ABC pattern here on the utilities, XLU. Now, the utility sector tends to be a more defensive sector, meaning when the market tends to be flat or down, you see money often go into utilities. They're not high growth stocks, so they're not going to be ones that are going to be doubling a lot. At least the individual stocks aren't going to be doubling in price very often or anything like that. They usually have great dividends, though, those individual stocks. You don't get the dividends with the ETFs, though. So if you're trading this as a trade, you're not going to just keep that in mind. You're not going to get the high dividends from some of those individual stocks. So that might be something you factor into your decision. Anyway, so you can go through those and take a look at those. This is the healthcare sector. It looks like could be a little bit of a bullish ABC pattern forming there. XLF, kind of a cup with handle formation, although it's ugly today, but if it could rebound and break out, it could really have a nice bullish move there. So anyway, you can create your list, and then we might reference this. And if I see a trade on one of these, I might pull the trigger on it. And but I thought I'd go through that as a little part of a training today, so that you can start incorporating those and start learning more about those different sector ETFs. All right, let's do a little bit of let's look at a couple of individual stocks. Under computer and technology, I like this support.com SPRT. It's a 99 strength rank. Let's switch this over to signals here. Now it's down today. You say, well, why am I keeping an eye on this? Well, you have this big move up right here. Then this looks like it could be wave A, wave B, wave C. And it's down quite a bit from those highs, and you'd want to see it reverse. But again, we're not getting into this today. I'm gonna put this in a watch list, because if it can hold here soon and start moving back up, like I said, this could be the correction for the start of another move up. And if it has no start of another move up, it could work its way back up to these previous highs. So it may be short-lived. Maybe because if we put it in here and it ends up all the way back down here, I'd probably boot it out. I don't want to. It shouldn't come all the way back down to where it was, because that tells me that this was something that whatever that news event was, it's not holding. It came all the way back down and basically erased that entire move. It shouldn't do that. It could have a deep pullback, though. But this is about an area here where it should start to find support and start moving back up. And so we'll put that in our watch list. Let's go ahead and add it to our watch list. By the way, I'm going to kick some stocks out of the watch list today as well. Save and go to watch list here, and then let's add our alert. Go tell us when it goes from hold to buy. And let's do another one here under oil and energy here. Go under the hold section. I like this TTI, Tetra Technologies, 97 strength rank. Now, this is a $2 stock, so one of the first things I want to do is make sure it's not an over-the-counter OTC, but it is trading on the New York Stock Exchange, so that tells me there should be enough. I should be, well, it's trading on an exchange, so I can trade it out of my brokerage account. What do I like about this? Well, you have this, just like the whole energy sector ETF looked like you had this big pullback here, and then it looks like you have a possible inverse head and shoulders pattern. There's your neckline right here. It's had a down day today. We're not getting in today, though. We're going to wait for it to go back to a buy signal. Hopefully it breaks out when it goes back to a buy signal, if it goes back to a buy signal. But I'm going to go ahead and put this one in the watch list. and put the alert on. This will send me an email if that alert goes, if that signal goes from hold to buy. All right, now let's go through our watch list here real quick because there's a few stocks I'm going to boot out. I'm going to boot out this BTBT, and it could still be a bullish ABC pattern right here, but that watch list is getting a little bit too big. It'll still be it's already gone back to sell. So if it goes back to hold, it'll be back in that that hold section. And if it starts to move back up, we'll see it again in the business services sector. So we could add it later, but it's gone down a little bit too far right now. So I'm going to go ahead and boot that one out. Let's go to watch list here. Let's kick it out. I'm also going to kick out Beyond Tech right here, BNTX. Again, the same thing. This could be wave A, wave B, and wave C, but it's at a sell signal now, and it'll show up on the list again if it comes back up. I'm going to just go down the list here. Let's look at it's all the B's pretty much. BNGO right here. I'm going to bump that out. Let's look at that one here. Again, we were hoping that it was putting in a bottom right here. It moved up. It started to move sideways. And this is a good example of that. When I make that statement, whenever you see a stock moving sideways, you want to pay attention to the direction it's moving in before it moves sideways. That's where it's more likely to go after it started moving sideways. It doesn't always. Here it was moving sideways. I was expecting it to break out and go higher. Now, we were waiting for the alert for it to go from hold to buy. It never did that. So there's no harm for us that it dropped back down, and it's all the way back down to about ready to go to a lower low right here. But I don't like this anymore because of that, and so I'm going to boot it out of the watch list. But I mean, whenever I say that nothing is exact, that's what I'm trying to emphasize. It just because there's a higher probability that it should have gone higher off of that price action, that behavior doesn't mean it will. It just more often it will. It's more likely that it will, and that's the slight edge that we're trying to gain from that price behavior when we see it. All right, let's boot that one out. Then I'm going to go down to MVIS right here, Microvision. It's gone, same thing with this one too. It came all the way back down. It's back to a sell signal. We were hoping that it was going to start moving. Now, remember on this one, we had a couple of buy signals, but they're really small buy signals, and I wanted to wait till the next day. The next day on this one, it dropped, so I held off. And I set the alert to go again. If it goes back from hold to buy, did it again, had a weak buy signal here, and then it dropped from that. So it's a good thing. That's why sometimes when I get the buy signal, I want to look at it again. I personally just don't automatically go in and buy it. But again, if you don't know what you're looking for, then yeah, because most of the time that's going to be the time it's going to be right. The time the algorithm is saying when it goes to a buy signal, algorithm is saying there's a good chance that stock is going to go up from there. But if you know how to read price action and you can add that to your analysis, then you can be a little bit more picky sometimes. When you get a buy signal, it's not a real strong buy signal, then you could wait like we did on this one. And so I'm going to boot this one out, NBIS. And then this Capri Holdings, CPRI. Remember on this one, we had this impulsive move down, but then we had impulsive up, and then it looked like it was kind of corrected. It looked a little bit choppy through here. And I was actually hoping that that was going to be a reversal, a bullish reversal right there. Never happened, kept dropping. Now we're all the way back down. No reason to keep watching this for now. But we never got a signal to get in it, so there's again no harm there. So let's boot out CPRI, and then one last one, BXC. This was one where we were hoping that again that this would reverse off of that. Looked like a little bit of a hammer candlestick formation. Tried to, but then it rolled over. It's gone to a lower low, gone to a sell signal. Boot this thing out. Now the rest of these, I'm growing really impatient with KRUS. I'm leaving it in because there's still a possibility that could end up becoming a higher low right there. But if it gets all the way, if it comes down to this area right here, we'll boot that one out as well. There we go. Oops, must have hit something here. All right, SGOC, this one's getting close to booting out. It's gone back to a sell signal, but we're trying to make sure it holds that low. If it could start rallying, it would give us a higher low. But that one's not looking great. But this is a good learning moment here, though. Remember, some of these stocks that we put in that list was back when our buy-sell ratios on the market, remember under our direction alerts here, we're down below 1. And now we're booting them out. Well, that's why we look at this. This is why this is important, is if we're not getting the market participation, if there's not a breadth in the market where a large amount of stocks are outperforming or moving together, if there's only a few stocks that are holding up the market, then you're not going to get a broad rally, which means that it's harder to find the stocks that are going to go up. If you've got a lot of participation, it almost doesn't matter what you buy. This time last year was fantastic because when the market would rally, everything was rallying with it. Pretty much everything. There were very few stocks that were going down when the market was up, which means it didn't matter what you picked. You felt like a genius because whatever bullish pattern you looked at, it worked. But when the opposite is true, when there's only a few stocks that are holding up the market, you've got to find those stocks, and it's harder when there's only a few of them. It's harder to be right, and it's hard to get that. And then and so you want to pay attention to that because that's if you look back in your trading results over several years, that's probably when you got beat up the most, was you got too aggressive in conditions that weren't ideal for performance, where you had a lower chance of getting those few stocks that were outperforming the market. Sorry, I didn't mean to go off on that little rant there, but wait here. Oh, Alex, so this next one here, LXU is going to give us, so we'll get the alert tonight. This is one that, I don't know if I want to. Because there's already one I wanted to buy into, but I don't know if that's a nice strong move. We could wait for the alert tomorrow, and then I could make a decision on that. I mean, if this does break out, and sometimes on a big day like this, you'll get a little bit of a pullback the next day. We might be able to get a little bit of a better entry point. So I'm going to go ahead and wait till tomorrow. On the other hand, it could end up, and that's the whole point of watching this. If it breaks out of here, this thing could really take off. But I don't think it. I think with a move like this, it could go up tomorrow, but it might just go up to this resistance area. So I'm going to go ahead and wait till tomorrow on that one, even though we got the buy signal. Because again, we don't have the alert yet; it'll happen tomorrow. But being this close to the market close and that strong of a day, that's going to stay a buy signal by the end of the day. COPN, this one still looks okay. Let me take the volume bars off so we can see the chart. Again, we got this still looks sideways right through here. As long as it doesn't drop below that low, it's possible we still have that inverse head and shoulders pattern. TLGS, that one still looks okay. ORMP, that still looks okay. Again, we got just a sideways movement with this impulsive move up. Waiting for it to go to a buy signal anyway. This one's closed, BEAM. If it drops below this low right here and goes to a lower low, I don't like it this deep. That's a deep retracement. It has kind of broken that trend line as well. But again, we're waiting for it to go back to a buy signal, so there's no harm in waiting to see if this starts to rebound and go back up. This might be close to getting booted out if it drops too much further. KDNY, same thing, still looks okay. CLNE, this is the one I got the alert on that I was considering getting in. Although it's down a little bit today, can kind of reverse that. Nice little breakout move yesterday. It was starting to break out. I'm going to wait on this one too. With that down day, no reason why we can't wait till tomorrow to see if it can reverse that. And again, I just don't like all the mixed signals we're seeing today, so I'm not going to add anything. All right, so that's, and then we added this SPRT today. So now if we go to the portfolio here, we're still down a little bit, down about $1,000. There's one stop adjustment I was going to make, but let's look at the individual stocks. Just because the portfolio is down doesn't necessarily mean that it's bad. It just could be part of the fluctuation. PFMT still looks okay. We're still waiting for this to kind of break out. It still held the higher low. SENS. This is one that we just kind of added. Why isn't this going in order here? Hold on. Okay, so PFMT looks fine. RM is breaking out. That's off the highs of the day here. Now, we're also at the far right side of the extreme reversal risk. So we're breaking out right here. But what we could use now is we could use that close below the low of the previous day. So if tomorrow it closes below today's low, we could go ahead and get out with whatever profit we have at that point. On this one, I'm going to, for now, for today, I am going to adjust the stop up. Our stop is right down here. I'm going to adjust it up to here for now. But if we do get that close below low the previous day, we could just take profits. Now, why? What might be a reason why I might not do that? Well, actually, because we're really extreme here, I might go ahead and do that. But a reason you could make to not do that is that we're just breaking out. I mean, if this holds this breakout, and it may not, it's come off the highs quite a bit there. But if it can hold that breakout, this thing could be off and running again. You can see some of these moves it's made when it's broken out. By the way, this is what can happen sometimes is you get a run up to that breakout area, then it moves sideways along it and then breaks out of it. But so, and it could do the same thing here. Maybe it just moves a little bit sideways here. But by tightening up that stop, maybe we just wait and see if it moves a little bit sideways and then takes off again. And by moving sideways, it could come back off of that extreme reversal risk range and then take off again. So I'm going to just adjust the stop up tighter up here on this one, but then we'll keep an eye on that. And like I said, I'll have the recording tomorrow if I decide to, if it does end up closing below the low of today, or looks like it will, maybe I take whatever profits are on that. I'm going to wait to adjust the stop here. Let's go through the rest of the list. STKS, again, our stop is right below here, so we're still okay, but getting kind of close to getting stopped out. DDS still looks okay, still in this kind of sideways range. So it broke out, and it's kind of moved sideways. It's up a little bit today, so it seems like it's moving in the right direction. Nothing to panic on that one. MLSY, this one's getting close to getting stopped out. Our stop is right below here. It needs to start moving higher to make sure we keep that higher low. CAN had a nice move the last couple of days. Our stop, I think our stop is still down here on that one. I don't want to adjust it yet. Or maybe, I don't know if I moved that one or not. I'm going to let this thing go because if it breaks out of here, this could really take off. So far it looks like it's put in a higher low. NTLA, I think our stop's below here. I mean, this one's trying to break out of this range, so it still looks like it has kind of that ascending triangle type formation there. That one still looks okay. I mean, not great, but it's still all right. HOV, remember this one almost stopped us out right here because our stop's right below here, but it's down a little bit today. But again, if it can break out of that area there, it could look pretty good. WILL, now this is one that we're in that extreme reversal risk range. We have a bearish reversal candle today. This is one where I could wait to see if we close below the low of the previous day. Now we got in this one a little bit late, so it wouldn't be much of a profit. But I'll look at this tomorrow, and in the recording I do tomorrow, we'll see if we can make a decision on that one. Futu is not looking great. I want to make sure it doesn't drop below there. Make sure it keeps a higher low, had higher highs through here. And what the reason behind this one, it looked like we were stair stepping down. And then, there's always that possibility, have this little burst of a move here, and then you have higher highs, higher lows, but you have to, what could be happening here is this could be a bearish ABC pattern. I could have waited for it to break above this high as additional confirmation. Obviously, we're all expert traders in hindsight, right? So, but it doesn't mean this thing's broken yet. If it drops below that low right there, though, then that's when we'd want to be stopped out, and that's where our stop is. That's when we know we're wrong. So we'll wait on this one. Still Still could start to move back up. And then SENS still looks fine. This looks kind of, you got this cup with handle type formation here. If it breaks out, this thing's really going to take off. So it still looks okay. I think our stop is, can't remember where I put the stop. I had to put it. Yeah, doesn't matter. I'm not adjusting it or anything. So, all right, real quickly here. I know I'm running late. Let's adjust the stop on RM. I'm gonna adjust it. Oh, let's go it here real quick. So I'm gonna put it right below here. So I want to see what the low of today is, or of that day is, and I want to go just below that. So when I put the mouse over that day, the low is $56.90. So we're going to just say $56.85, just a little bit below there. $56.85. Now again, because it's overbought, we could, if it closes below today's low tomorrow, I could get out of it. We got in at 51, so we're already at a profit. If we got stopped out at that stop point, we'd still have a gain. So I'll look at that and make a decision on that tomorrow. I don't have to make it today. Let's see. Oh, I did want to go over Tesla. I got out of Tesla on Friday. We made $330 on Tesla. Let's look at that here real quick, because I may get back in this one. So I got out because it was overbought. It had been overbought right here, and then it closed on Friday below the low of the previous day. Now, this had like a little bit of a bullish reversal candle yesterday. This could, I mean, that could be a higher low. It could still be within its trend. It's pulled back with that recent selling. It's pulled back off of the extreme range. It's gone to a hold signal. Well, actually, it's going back to buy today. I'm not buying it today, but this is one that we could. I'm going to go ahead and put it back in the watch list. It'll probably give me the alert overnight. But that'll remind me to look at it again, see if maybe we re-enter. And then there was another one that I might want to get back into that we cashed out of before, which was, let's go to trade history. Sorry, I'm really late today, but this OPRX right here, we made $447 on it last time. But it's pulled back. And it looks like a nice little bullish ABC pattern right here. And I might want to get back into this one. So I'm gonna put that in the if this goes back from hold to buy, I might want to get back into this one. So I'm going to put that one back in the watch list. Put my alert on. All right, let me check all my notes here. Looks like I covered everything. All right. Now, again, reminder for tomorrow, I'm going to be doing it just on a recording. I don't know what time of day I'm going to do it. I'm going to be able to fit it in. But just look for it on YouTube, and you can review that. And that'll be it for the week. We'll be back on the regular schedule next week. I'll be back in town again. So, all right. Have a great week, everyone. And look for that class sometime tomorrow. And then I'll see you with the live class next Tuesday for the market update. Bye, everyone.